GameStop stock surged 8.7% in premarket trading after the company reported a record quarterly profit of $389.6 million, a dramatic increase from $44.8 million in the same period last year. This development has sparked renewed interest in GME as investors assess the company's evolving business model and financial trajectory. The earnings report highlighted a 14% year-over-year increase in total sales, reaching $835.3 million, with a significant portion of that growth attributed to the collectibles segment. This performance has positioned GameStop as a company in transition, moving beyond its traditional retail roots and into a more diversified entertainment and digital asset space. The financial results were accompanied by a strategic move from the company's board, which approved a $2 billion stock repurchase program extending through June 2029. This action signals a commitment to returning value to shareholders and could influence investor sentiment in the coming quarters. The stock repurchase initiative follows a broader trend of GameStop focusing on financial discipline and capital allocation, which could provide a more stable foundation for long-term growth. The premarket rally to $22.74 reflects market optimism about these developments and the company's ability to sustain profitability. GameStop's collectibles division has become a key growth driver, with most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The company attributing much of its recent success to increased demand for physical collectibles and digital assets. This shift in focus has been a strategic response to changing consumer preferences and the broader market dynamics in the gaming and entertainment industry. The company's ability to adapt and expand into new revenue streams has been a central theme in its recent financial performance, and it appears to be paying off in a measurable way. Another notable development is GameStop's increased ownership stake in eBay, now at 6.55%. This move continues the company's pursuit of a potential acquisition, despite a rejected $56 billion proposal from last year. While the acquisition is no longer on the table, the ongoing investment in eBay suggests that GameStop is still exploring strategic partnerships and opportunities that could enhance shareholder value. The market reaction to the earnings report has been swift and significant. Investors are closely watching whether the stock can maintain its upward momentum or if the rally is a short-lived response to the earnings surprise. The company's cash and marketable securities balance has also grown, which could provide flexibility for future investments or shareholder returns. However, the long-term sustainability of this performance will depend on continued execution in the collectibles and digital asset segments, as well as broader market conditions. GameStop's operating income for the quarter reached $143.3 million, marking what the company described as its best first-quarter performance in history. This level of profitability is a significant milestone for a company that has faced considerable volatility in the past. The combination of strong sales, improved margins, and strategic capital allocation has created a more favorable outlook for the business. Despite the positive developments, uncertainty remains around the company's ability to sustain this performance in the face of macroeconomic challenges and evolving consumer behavior. The gaming. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. And collectibles markets are subject to trends and seasonal fluctuations, so the company's success will depend on its ability to innovate and adapt to changing conditions. The next signal to watch will be the company's next earnings report and any further developments in its digital asset initiatives. Investors should also monitor the stock's performance in the coming weeks to see if the recent rally translates into a broader trend or if it's a temporary reaction to the earnings surprise. The company's ongoing pursuit of strategic partnerships and its evolving business model will continue to shape its financial performance and investor sentiment.